From market. The challenge of doing these when you are in the middle of earnings season is multifold. What we're going to do is we're really going to go through the semiconductors. Thus far, about half the semiconductor companies have reported, and I include within semiconductors, semis, semi-cap equipment, et cetera, et cetera. We've got to focus always on the semis, as painful as it is to try to understand the technology, because they really are kind of the spend that drives everything. And so even though with today's Fed announcement, clearly the market is trying to tell you that no one cares about the next 6 months, they're all looking forward and having FOMO for the full year. Let's still try to do the thing that we're supposed to do, which is actually research these things and stay up to date on what's going on with each of these industry groups. Okay, past performance is not indicative of future returns. I do have positions in a number of semiconductor names from time to time. So, mostly right now I'm long because, and I'm in particular long AMD off of today's call. I kind of swung traded, which is not usually my deal, but because of what I saw, that's what I did. I really want to start out with Taiwan Semi, which kicks it all off in some ways. I mean, there is Micron that reports in December, but Micron is such old school semiconductor chips that it really doesn't give you a lot of knowledge when you know that the market is doing what it's doing. It's not going to tell you that much, but Taiwan Semi absolutely does. And one of the challenges of looking at Taiwan Semi's numbers is the realization that they absolutely are going to be reporting everything in Taiwanese dollars. So as a result of that, they don't have quite the same inflation impacts that we do. They definitely benefit from the labor cost differential between the US and Taiwan, even though Taiwan is a super developed country, et cetera, et cetera. It just so happens that you do end up paying someone a whole lot less in Taiwan than you do in the United States. Now, just so you know, the thing that you have to really realize about all of the semiconductors is that they are going a number of fairly major transitions for various reasons. You can look back at all of the China stuff that I do. You have to realize that because of a bill that came out as soon as President Biden became elected, we in the United States have been promoting the semiconductor space pretty aggressively to try to bring it back onshore. We're not going to go into the politics of that because surely there is a lot. But even Taiwan Semi has developed foundries throughout the United States. Primarily, I think the biggest one that I'm looking forward to is the one in Arizona, my second favorite place. You've also got Global Semi there and Intel building foundries there. So a lot of this is going to come back onshore. And so you do have kind of this weird thing happening with equipment as those foundries come online that is a little bit different from what's happening on the chips. Meanwhile, you had all of last year being this massive shortage in chips, and now you've got some of that rolling off. Clearly, with companies like Micron and the lower end of the chip spectrum, you're seeing inventory manage itself. And then on top of it, you've got Intel doing this whole crazy mess of things to try to reorganize itself. Intel being such a large player and having kind of the breadth of activities across semiconductors, it's kind of a weird thing. And then you have the semi-cap equipment companies, depending on what precisely is their equipment and where it sits, telling you all sorts of stuff. So quite frankly, we still have about half of the semiconductor, semi-cap equipment field to report. This is a very big overview, but I would say if we were to take one thing away, it does read kind of positive for both AMD and for NVIDIA. Now let me show you why I say that is, despite the fact that AMD's reporting could be taken in a number of ways from last night. Really could be taken. So you kind of have to make a call on this. So let me go through it really quick again. Back to my little slide here on Taiwan Semi. Taiwan Semi reported, I want to say 2.5 weeks ago. They're a fairly early reporter, and this is what they showed. And the key thing to understand with Taiwan Semi is they make the 5 and 7 nanometer chips, which are the smallest. Really, at this point, no one else meaningfully does that quite the same way. That is the chip that basically allows you to do all of the, let's call it high-end technology stuff. I'm trying to keep this as simple as possible. But essentially, if you want to process graphics with great speed, you're going to need Taiwan Semi. So smartphone stuff, it's really going to be more some of the more advanced features in the smartphone, not the less advanced features, and so on and so forth down the line. Now, interestingly enough, DCE is consumer. So that was weak, and that has been weak across the board. That's part of the reason why you saw Micron and Intel do what they did. So that was known that it was going to be weak. Automotive, we've seen be strong, but it's very mixed how it plays out because remember, there's a mix of chips that are in automotive companies. In this case, realizing that Taiwan Semi is really mostly this as a percentage of what it makes, so to speak, it means something very specific. If you flip over to like just a couple of other Clack and Lam Research, even though Clack did great, Lam Research is in kind of a different space. You see a very different set of numbers for automotive. And it just depends on who's buying what and what they're doing with it. I'm trying to keep this as high level as possible. But with Taiwan Semi, given how strong their business was, it really was a question of what were we going to see in the companies that had a shot at actually making the types of chips that would reflect this. Okay. And so when we look at that, here you can see specifically the 5 nanometers did very well. The 7 nanometers were a bit weak. This is the red bar versus the blue bar. Okay. So we know that people are spending. What precisely are they spending on and how are they allocating budget? Just from Taiwan Semi, it appeared that people were going to try to allocate budget to one, even with a reduced budget, or else they would have bought both. They were going to allocate in one direction versus another, which is really the newer side of R&D expense versus whatever they were doing in the past. And we anticipate seeing this tonight when Meta reports. We anticipate seeing this in Amazon. It's just what then does it imply for the various sectors that are the end markets to that, which would be data centers, but a very specific part of data centers. And it would absolutely be virtual reality graphics, very fast syncing sort of metaverse type stuff. Okay. So we kind of know from the spend that it would look this way, but how does it then play out for the others? We're going to find out tonight on Meta and the such. But just to give you some framework that's more basic, some of you guys are super advanced that watch me and hopefully you're not bored out of your gourd or feeling like this is too basic. This is what Intel put out, which is what made me a little bit cautious about the data center business, but AMD kind of had the reverse thought process. So it's still hard to say, but of course we care because of Amazon. Of course, today's Fed report makes you feel like even if they report poorly, there's a possibility that this market rallies on that poor report. But let's just take a look at it nonetheless and do the rigor of it. When you look at Intel, data center AI was down significantly. That's over a $2 billion reduction in revenue. And then Mobileye, which is going to be your very high, it's like your embedded high interface graphics type stuff going on. Mobileye was up significantly. And you had as well accelerated computing and graphics up just a touch. Okay. So this is what I think made people a little bit concerned in general, because given that IBM also kind of showed still good numbers on data center, but a slowdown, and then Microsoft still great numbers, but a little bit of a slowdown, then you're looking at Intel and you're like, what's going on in data center? That's kind of, I think, where people were like, all right, we really have to see what AMD has to say and what NVIDIA will ultimately say on the 22nd to figure out what's actually going on as relates to the build here. Okay, whether or not they're making money off of is a different story, because realize everybody sits in a different spot of this. Okay, hopefully I'm not making this utterly confusing. AMD, they had a big increase in R&D. So on the top line, you had pretty solid growth. I mean, this is like, I think 16, 17% growth. And then you ended up with this net income number that was almost like they lost money. But what it was that they almost doubled more or less their R&D expense. And if you add that back in, you still get a down quarter. Okay, how do we want to think about that? This is what the quarter ended up looking like. And then they said very clearly why they had the down quarter, but data center did fantastically. Now, AMD is going to have a better chip. So it's really a specific type of spend that they are really intuiting towards. But essentially, they were very clear that they gained market share. And when pushed to it, they gained market share from Intel. Okay, now if we look at the numbers, which I think are always really important because you kind of want to know, like, well, what's the size of that gaining market share, which still makes it a curiosity. So it could be specific to AMD and possibly NVIDIA. you can see that this is a $2 billion drop versus a $500 million gain for AMD. Still unclear whether data center did okay, or if off of a smaller pie, AMD just took more of the pie. They definitely took more of the pie, and they definitely took it from Intel, but we don't know, did NVIDIA take the other part of the pie and actually data center semi spend is fine? And so then we should look for any kind of recovery on this side to be awesome sauce, or what exactly is going on there? And that's kind of why I think within the cluster of companies that relates to AMD, even before the Fed came out, I'm sorry, among the cluster of companies that related to data center, even before the Fed came out, you saw a rally this morning. That's what I interpreted as going on. Now let's also go through the rest of the stuff that is in AMD's revenue numbers. Okay. Embedded is actually the Xilinx number, and then you have all other here. These are costs that are a little bit funky related to the merger stuff that is going on. But Xilinx, that net revenue, just for comparison, was about 1.1 billion. So this was still a really hefty uptick. You know, when you're doing that type of circuitry, you are doing some rather advanced, high response rate type of stuff. Let me say it that way. So that's going to be more your graphics, more your weird data center stuff where you're trying to do very fast response mobile. It'll be your IoT, but it'll be the higher end of IoT that's going on there. And then if gaming was weak, okay, look at this. This is down a touch. Now, electronic arts, it's hard to really understand precisely what's going on here. Electronic arts actually did a decent quarter, though it got a bit clobbered, to be fair. I will do the gaming companies all together. We still have Take-Two, and we have obviously Activision embedded within Microsoft there. But, you know, some of the things to realize with respect to gaming is that you do have PC gaming, right? And then you have online gaming, which then, even though it's a gaming situation, it does kind of look more, I mean, the nature of the chip is very different. Okay. So this is all combined in AMD's breakout. Now, to be fair, typically, I don't believe they break it out this way. It's post Xilinx that they started to break it out this way. So it's a little hard to see the numbers clearly, even though they've done a good job doing the approximate comp to help you out. Client is kind of just like client service type stuff. So it's a little bit of a funky. It took me a while to figure out what in the world that was relative to some other things, even though when they were talking about it, but it just has to do with more, you know, I guess it would be, you know, consulting services for how they should then use the AMD chip, that sort of thing. So AMD, though, because they're setting up to really be taking share from Intel, that's what makes it, that's why it's rallying so aggressively. Because if you then look forward to, you know, whatever it is your macroeconomic viewpoint is, this is a positive. With Intel, it looks like some of the new products that might legitimately compete more aggressively don't come into play until 2024. Knock on wood, everything actually goes correctly, because I really hate seeing Intel get clobbered so much. But given that, AMD's spend on R&D to try to take market share totally makes sense to me as far as that goes. Hence the rally, hence the bullish nature. Relative to historical points, this is actually a cheap point. So what do we think about NVIDIA? Because obviously that's the real thing we care about, given that, you know, the past is the past, and NVIDIA, AMD may float upwards, but NVIDIA is still the big unknown. NVIDIA had a rough time of it last quarter. And quite frankly, this is from their last earnings report, which would have been November, but really reporting through October. September, October, something like that. They cut the quarter kind of strangely. Anyways, the real thing to realize is that gaming will be down for them in fiscal 2023. They anticipated that to be a smaller bit. Data center is, you know, the biggest thing for them is this data center stuff. It's the same stuff for AMD. They're anticipating that to be closer to 54%. Realize too, though, they do have a couple of pieces that have always hurt them. OEM and others, like somewhere hidden in here, it's kind of mixed in a bit with gaming and data center, strangely enough, is the chips that were used for mining of cryptocurrency. That is not going to be a major source of revenue for them. That was clear as day from every single person that has reported anything related to do with crypto. And that's despite the fact that you've got this run up, because you still have a lot to absorb before you need to be, you know, doing that type of activity in a profitable way. So NVIDIA, though, all in all, I would say that probably looks pretty good. And that would be why you're starting to see the rally today. In my opinion, I'm going to stop sharing and kind of open it up, and then we'll just kind of get to it, because I know a lot of companies are reporting this evening. Hey, David, how you doing? You're on mute.
Yeah, I'm off mute. Yeah, great. Yeah, I think overall what we've been saying all along is the recession scare was not valid.
Yeah. I mean, it's so rough because you really do have two more quarters. And quite frankly, all of the semiconductors, even with the various things that the US has put in place, all of them benefit from China opening. There's not one that doesn't. All they did was just split the chip, one for the US and one for China that meets the requirements under the regulations. So like every single one of these guys benefits from a China opening. China's already told you it's going to open. It's really whether or not we start to have conflict with them more aggressively or we just grow like crazy and everybody's kumbaya. So it's kind of a weird circumstance that we're in right now
Um,
for the next two quarters. But you're right because you know the you know has the weakness been priced in case something really funky happens in the next two quarters? There's strong arguments both directions, but then if it lifts, does it lift aggressively? That's the thing. I would say that the two caveats that have made that the Fed talked about a bit was they don't really have an ability to effectuate change on food and energy. But I will say that after reviewing the earnings for about a third of the energy companies, we still have another two-thirds to come out. There is additional, not in the US, but overseas and in offshore production increases were pretty significant, particularly in North Africa, which would specifically help out Europe. Then you've got OPEC doing whatever it does, but at least it won't be like there's no oil like it was last year. Like there's literally no oil. So, anyways, the point is that might alleviate some of the pressure, particularly in the spring. But definitely, if it keeps going at this pace, you should be okay through the summer as well.
I'm glad you brought China up because a lot of these people, same recession people, are saying China is inflationary. I just don't get that.
Yeah, I think they think that what China's going to
China
do is drive.
reopening.
Yeah, I think they think that they think that China will drive up the price of raw materials and the such. But I think that they're probably underestimating some of the build in the raw materials. Now, I don't think that we have massive amounts of oil on this earth. I'm not so naive as to think that. But the production numbers came out pretty decent for Chevron and Exxon and Hess. Right, Hess absolutely is taking the oil out of North Africa, so that's 100% going straight to Europe. It's not going to come to us. We don't care either way. Only thing I want as an American is to stop shipping our natural resources overseas because I think we need them, quite frankly. And I think that whenever we do that, we borrow from our future. And I think that's really messed up. Even though the kids of today, they feel really passionately about renewables and how oil is the biggest evil of all time. I'm going to tell you, when times get bad, you're going to be stoked to have that oil in the ground here in the United States and not have to figure it out, so to speak, for lack of a better way to say it. And yeah, the only one area, so nat gas, so it turns out when you start producing more oil, you'll naturally produce more nat gas anyways. It just is because there is a way where it becomes a byproduct. You know this. You're a Texas guy, so I feel almost stupid sometimes telling you about this. However, that said, oddly enough, because of the nature of it, even though people will want more of that, they'll probably take advantage of the more affordable price on nat gas on the curve. They also won't necessarily fail to want coal, for lack of a better way to say it. And that just has to do with what precisely happens during the summer months in the United States specifically, and how you transport nat gas from one point A to point B. So because in general, coal inventories got drawn down so aggressively over the last 2 years, and also, it was always the case that with coal, we were going to ship it overseas, not use it here. There's still pent up demand for coal, and then metallurgical coal. We have had shortage for a bit of time, both here and because most met coal comes out of Ukraine and Belarus, which that is that, so to speak. Now,
Right,
China
right.
produces a lot of coal, and that's driven down the price of coal in Asia in theory. But I think they need that coal because they still don't make enough oil, and they don't have any kind of problem burning coal. Wait, let's
Yeah, I
see.
think what Powell said is, and what we've said all along is, you can have full employment without inflation. That's exactly what he said.
Yeah. Dolbig, I was going to answer you. I don't really know that particular company very well. Once it becomes, thank you. It's awesome for you guys to give me the companies that you're interested in because I do kind of keep track of it. And then once I'm out of earnings season, I try to look into it. I'll take a look at HiMax eventually. At some point, I know I have to start learning the Chinese companies, even though I have avoided it, or all the Asian companies in general. It's just because they feed into some of these other US companies. And so sometimes you're not getting, it's beneficial to me to get a bigger picture. Yeah. Sorry, I cut you off, David. Was there anything else you were trying to say there?
No. I was just saying that the street, the big hedge funds, big mutual funds, they bought this recession scenario, and
Yeah.
which means they're way underinvested.
Yeah. I mean, a bunch of
So,
them. Yeah. I mean, it's interesting because you're right. It's going to be the hedge funds, some of the asset managers. I think that the pension funds and others will try to go ahead and take advantage of the high rates and lock in a lower risk format of earnings, you know, because they can, quite frankly. There's not
okay.
natural buyers of bonds. But I think you're right in the sense that once those capital payments come in, those coupon payments come. It's just I'm yeah. I think that there is a lot of cash, and whether it'll go to fixed income or it'll go to equities or it'll go to both, it's hard to say. But even if you are, so it depends. So an insurance company isn't really paid to be too aggressive. A pension fund is definitely not paid to be too aggressive. Asset managers need to do the right, like they need to make money and they need to not be in the wrong asset class at the wrong time. So if there is an underinvestment and there just is a decision that the major risk in the equity premium is gone, I'm saying it in a really specific way. I hope it's not annoying, but if
Mm.
the another way to think about the recession scenario being priced in is that the risk premium for holding equities is really high. If it then is truly not as risky, then the pop that you would get on equities should, in theory, be a lot higher than on debt. And
Yes.
also, if you were holding stuff that was way too conservative, if you were holding like grocery stores, you might cycle out of that. And because grocery stores don't form the biggest market cap, you could get a pop as well on the indices, since the indices are still, like, if you were to divide out the names, you see very clearly the larger cap names are all your growth names. So it's going to be like Google, Microsoft, Apple, Tesla, et cetera. Those, if you just go by market cap, you'll see that huge components of the indices are that. So I'm with you a little bit. I'm definitely with you.
Well, the pension funds here, I mean, they want to get 7%. That's their
Yeah,
benchmark.
they don't want to necessarily
Four and a
make
half
more than
is
that.
not 7. Four and a half is not 7, and they've got
Yeah,
huge overhead.
this
So I
is
mean,
true.
they got to be in stocks.
Yeah, some of them will lever that 4%.
Okay.
So they'll do some kind of funky structure where they're using like half the capital but getting twice the bang for their buck.
Hmm.
It's the bigger pensions definitely have access to that sort of thing. Some of them will just go into corporate bonds where they would be able to get it, like really, really um, safe, boring corporate bonds. There's a couple different ways they could do it. So I don't want to totally rule it out. But you're not totally wrong either. So it's not so much that I disagree as much as I could see them doing something clever to try to find a low risk way
Well,
to
there's
take it.
really good companies paying great dividends.
That's
Devon's a
true.
great company. IEP is
Yeah.
paying 16%. So
Yeah, I mean, I definitely agree with you there too. To the extent that energy in particular keeps getting clobbered, even though they are producing more oil, they're not doing it in a way that makes it. They're doing it way above their cost of capital, and they're making sure to lock in a certain rate of return. In other words, oil right now it's trading well above 70. Let's call it, okay, just below 80, and then it bounces around between 70 and 80, and even whatever happens later this year, it's still going to be well above 70. Um, you know, all of them, I think, have break evens in the US that are well below 60. Like they usually use 60 as the break even for the world. But in the US, we produce much cheaper than that. That's break even. That's not operating break even. That's actual break even, So,
it's 40 in Texas mostly, $40
yeah,
a barrel.
Texas is going to
Right.
be at 40. Yeah.
Right.
45 maybe in some cases, but yeah. they're not being onshore in particular is not being dumb. Offshore's got to do a couple of weird things, and then you have some of the capex looking strange. But nobody has a problem paying the dividend right now, and no one will probably for at least a few years. And so, if you want to split your resources on your portfolio and have a portion that's getting nice juicy 10% dividend yield off of certain energy stocks. So Coterra does that. They're onshore. They're mostly in Eagleford. They've probably a third in Eagleford, I want to say, but the others is other locations in Texas versus going farther up in a field. But there's plenty of good dividend yield so that you can kind of split it up. And all that's going to happen is eventually that dividend yield will get bid down, and so you'll just keep making it. And also, by the way, the other use of capital is to pay down debt, which is lowering the cost in general for them to continue to make money. So ultimately, these things probably will continue to move up in equity value, and then the dividend will continue to stay the same. So it'll look like a smaller dividend, but you'll still be making really nice money on it. In some cases, the dividend will remain the same, but they'll just pay you more because they're not necessarily pumping more out of the ground. So for those of you that don't have a portion of your retirement already in high bond yielding stocks, I can imagine if you're like a millennial and you're like in your mid 30s, given the time that you started investing, there probably wasn't a good time to get high dividend yielding stocks. You might want to go ahead and lock in a couple right now before, in case this thing really takes off and all the dividend yields go to like 1% again. You know what I mean?
Cool. Yeah.
All right, guys. Oh, anything else?
Not for me. You answered the question on Hymax. Hymax?
Yeah, I'll look into it after earnings season. It's a good question.
Oh, yeah, you sure do that.
Yeah, some of the overseas companies are really good. I think it's an overseas company. Anyway, anything else, anyone? All right, we'll close it out. See you guys tomorrow. Good luck. Bye. Oh, one last thing on Amazon. What I ended up doing, because you could just see how it was traded today, was I ended up there's nothing you can do. Well, Amazon you can, but with Meta it's a little bit different now. Is that one of the other? If this market's going to be this insane, like buy post any kind of earnings, then you can't set it up as a strangle, which is just buying a call and buying a put, or you can there's a couple of funkier ways to do it, but I ended up, just to be clear from yesterday, I did end up setting my Amazon up as a strangle.
When do they report? Tomorrow, right?
Thursday after the close. Yeah, tomorrow after the close. So you still have time on Amazon, but Meta will know pretty soon.
Yeah, we had a price of 106, so I think you're okay on put.
Yeah.
And it just barely hit yesterday.
Yeah, interesting. We'll watch it. It's going to be interesting. These are small positions for me. It's just that, boy, I've never seen something that could go either way. And if anything, as soon as it's clear what's going on, there's so much vol in this volatility relative to what's up that it is kind of a funky situation. All right. Hi, Trend Board. We're about to close it out. Thank you, everyone, for coming by, and we'll see you guys